Hey, this is June from Turning Point Life Investment, and this is your chart of the week. In this video, we're going to discuss another type of candlestick, more specifically a bearish reversal candlestick pattern. Okay, looking at this chart, you can see we've had a pretty decent uptrend, all right, for a couple of months, and you notice that stochastic is approaching overbought, meaning that it's starting to get extreme bullish or extremely bullish. And if you look at prices, it's pretty stretched out from the moving averages. And I've always used this analogy where prices, if you imagine prices to be like a rubber band and this 20-day moving average as your finger, for example, you can only pull that rubber band away from your finger for so long before it hits a limit. Okay, that's what prices are doing right now. You can see how it's pretty far away from the moving averages, and every time it's done so, you can see just like here and here, prices pretty much had to snap back, or at least it told you that it's reaching a limit. Now, looking at this chart, you can see we've created a doji candlestick. Okay, now dojis or any type of reversal candlesticks work well after an extensive trend, and we've already have an extensive uptrend. Now, not to mention where this doji showed up. It showed up right against a prior resistance. Okay, so that was a clue to tell you that momentum is starting to shift towards the downside. Now let me go into the next day. Now, next day we had some follow through. Okay, we had some follow through in terms of towards the downside. And you can see we have this candlestick pattern that's created, and that's called an evening star. Okay, what it means is that we had some bullishness that continued from this uptrend. We had an indecisive day, a possible pivot point on the next day that followed this bullishness, and then the following day after the doji we have a large dark candlestick. So it's almost like a 3-point reversal. If you can think of this stock basically just made a U-turn right here. Okay, again, right, it came right at a previous resistance, so that's what makes it more significant. And since the stock is approaching overbought, so you have to combine these things together to make the candlestick more significant, as opposed to if, let's say, the same pattern showed up somewhere in the middle. It's not as extreme of a condition, right? Reversals work well when a stock is in extreme either overbought or oversold condition. So in terms of trading, if let's say you were to buy the stock, or if you happen to buy the stock or entered somewhere around here, and we see this pattern, that is a very good clue to tell you that you should at least take some profit or move your stops higher, because we're right up against this resistance, and it's showing that the stock might reverse. Now, the following couple of days, you can see how we had some major selling that has occurred. Today, it ended in a doji candlestick. Okay, so again, we saw another doji, or we're seeing another doji after a pretty extensive downside move. So what is this doji telling you? It's telling you that the selling is currently losing momentum. Okay, we might get some kind of relief rally to kind of alleviate some of this extreme selling. Okay, so let's say you shorted this stock. Right about now is a good time to start taking some profit, or at least lower your stop a little bit closer. Okay, so you can see how candlesticks can give you a lot of information, especially depending on where it shows up. So I always say this, it's not so much about the candlestick pattern itself, but how you apply that candlestick pattern, and in which condition do these candlestick patterns show up.